For me, leadership doesn't really exist in the absence of having a purpose and having a vision. So if you don't have a purpose, right, you're just kind of a rudderless ship that's just out here doing stuff to do it. And you can be a very good manager because you're just trying to solve for certain deliverables. That doesn't make you a great leader. So first and foremost, you have to have a purpose that's driving you, and you have to have a vision that is actually the tangible manifestation of that purpose. Once you get there, you can actually start figuring out, how do I lead? And so the biggest learning I would take from, I think, working in the field and Harvard was that leadership is making people around you better, making them as good as they can be to help actualize some shared goal.
Welcome to the Nicholas Brown Podcast, a podcast talk show about real estate investing, business leadership, and personal development. Each week, we explore current real-life case studies about how to build financial independence through investing in real estate to build your personal portfolio through passive income models, along with interviews from the top business leaders and personal development leaders. Now, here's your host, Nicholas Brown.
All right, welcome to the show, everyone. I have another special episode. This special episode is going to be tied to leadership and tied to investing on there. If you watched a previous episode where I had the general, this is going to be pretty much tied to leadership. They work together, trust me. But this is a special guest. He deals with the multifamily and other types of investing. No, but I'll explain more to you. But this is special. Make sure you guys, if you watch this on YouTube, make sure you guys subscribe. That way you get alert. If you're listening in on any podcast channels, like for example, or iTunes or Spotify, make sure you guys download that. That way you get alert for any future series that I have tied to this. It's going to be a treat. It's going to educate you. So what I'm going to do, ladies and gentlemen, I'm going to read the about section, then we're going to get deep into it. But before I get in deep into this, I want you guys to give a review on this episode. What I'm going to do, I'm going to have a contest. The best reviews I get in the next 2 or 3 weeks, I'm going to give a course valued at $2,500, and I'm going to try to push this guest here to give you another tip if you need a special type of loan, these type of loans that we're dealing with. So make sure you guys give us a review. Okay, so here we go. My guest is Vernon Beckford. Is the CEO of Diversified Lending Solutions, one of the nation's leading CRE mortgage advisory firms in the country. His company helps operators position themselves to obtain the best possible loan terms. Here's 3 questions that Vernon starts off on his about section. If you go to the about section, he has 3 questions that he starts off with that makes him very unique and well experienced, ladies and gentlemen. The first question he asks is, do you have a local lender that won't fund your real estate investment project or can't within your timeline at a diligent time? Number 2, are you unclear on what your current financing options are or how to obtain them? Number 3, are you tired of searching for lenders from scratch whenever you have a new project that hits your desk right then and there? Boom, you're not alone. You see, Vernon has come across several pitfalls of operators figuring it out on their own or working with an unqualified mortgage broker to obtain a loan. Vernon says when he first worked as a securitization lender at Credit Suisse, and later as a balance sheet lender for life insurance Global Atlantic, which is KKR owned, that he couldn't count how many times that he encountered highly experienced operators that claimed to know their deals back and forth, but didn't know what terms were available when they needed them, where to find them or how to negotiate them. You see, here's a brief list of what Vernon's experience and accomplishments he has accomplished during the years. Ladies and gentlemen, He has an MBA with Harvard Business School. He's held several leading titles, such as director for one of the top asset management firms in New York. He was vice president for for a financial group that managed, ladies and gentlemen, here's the number. This year's back. He was vice president for a financial group that managed, and he's a brother if you guys are listening in. That's why I'm so excited. I'm honored to have this man for a financial group that managed 7 billion real estate portfolios. And a list of experiences goes on, ladies and gentlemen. It's a long list. So reach out to Vernon and he will send you his quick guide template download and a bonus video titled 3 Mistakes That CRE Underwriters Hate. I think that's the title. He has 2 different types, but that's one of the titles. But anyway, sir, I appreciate you. Welcome to the show, Vernon.
Thank you, Nicholas. Thank you very much. It's a pleasure to be here.
Man, I'm excited for you, man. I'm honored to have you, bro.
I need to travel with you all the time because the way that you just spoke up my bio, I just need you on hand.
Yeah. I love it, man. I appreciate that. But I appreciate the time. I value your time, ladies and gentlemen. We got this set. This is a purpose for. We're gonna do another series in time, but I want you guys to meet the CEO of this company and what's going on, especially my listeners. What type of listeners who wants to get into multi CRE? When we say CRE, we're talking about the multifamily apartment. Am I correct?
We're talking about multifamily, office, retail.
Wow.
The whole
Okay.
gamut of anything that involves the commercial sector. So
wow.
Not just multifamily. So
okay, not just multifamily. That's why I say, ladies and gentlemen, you have a treat. He's experienced in this, and his team that's under him is experienced, and the people that he surrounds himself with. So he can get you done. But I want to get straight to the basics, because that's the purpose. I ask you guys, I advise you guys to download this, and I advise you if you're watching this on YouTube to subscribe so you get alerts for this. Because in time, we're gonna have a little educational, or we may have other guests that's tied on to Mr. Vernon that, man, you're going to get a treat. We're going to meet your goals. So what we do here, Vernon, what do you go by, sir? What's comfortable for you?
Vernon is fine. That's fine.
Okay, great. Okay. I'm going to say Mr. Vernon. I'm just talking to you. Vernon, what we do is we focus here on this podcast. We focus on 3 things and we're tied on to it. So I'm kind of going to mix it up. We focus on motivation, teaching, and perspective. So first, before we begin, what motivated you to become the title? What got you into the CRE field? What motivated you?
So I went into Wall Street fairly early in my career. I was a college intern at Credit Suisse, and I was on a rotation of different departments. I was in sales and trading and in investment banking and real estate. And those were all great fields, but there was nothing that got me as excited as working on the real estate desk. At that time, it was the securitization group. And it blew my mind that I, at that age, could be involved in very large transactions that you'd read about in the newspaper and figure out all of the ways these deals were getting done. It really felt like Monopoly in real life.
Right.
So that was hugely exciting. And as a political science major who was interested not just in economics, but interested in how the economic landscape affects people's lives, I said, there's really nothing else that I could get into that would be more impactful to how people live than real estate.
Right.
The quality of somebody's life, positive or negative, is usually so much driven by where they live, where they shop, where they work. And so being in the middle of that was very exciting for me.
Wow. How many years back has that been?
I'm scared to date myself, but that was about 15 years ago, and been in the industry ever since.
14 years ago?
Just about 15 years.
Oh, 15 years ago it broke up. But man, that's strong. That's a blessing. Ladies and gentlemen, you hear that? That's a treat. You got knowledge here. Man. So 15 years ago, you come across. So you also want to major in the political field? at time?
Well, listen, I did. I majored
You
in
did?
political science, and as a New Yorker, born and raised,
Okay.
at Columbia University. Poli sci was kind of one of the big areas of focus there. So I did that. I loved it, but I always knew I was going to be in business, and I always knew that ultimately that should inform my decision making and where I wanted to focus my efforts. But business was always as interesting to me as anything else.
Wow, wow. So that's what leads to our series about leadership. Have you ever had people under you, in your groups? Any?
Absolutely.
Okay.
I've been the grunt, the analyst that
Okay.
had to sit in a room and until 3 a.m. And this was before all this digitization where we literally had to look at physical files and ship them and get 2 or 3 hours of sleep. So I've done
Yeah.
that. And I've
Wow.
also been in a position where I had, folks under me, managing a team and having to figure out how to organize the deal as opposed to doing, the as they say, the grunt work.
Right.
So I've been both seats.
So you've been in the field, as we say too. You've been in the field also. You've done the ground where you've done what it takes. You have done.
Absolutely.
Okay.
And that wasn't just modeling on an Excel spreadsheet. That was literally carrying boxes. So I started from from spending hours in the mailroom and trying to curry favor with the copiers by giving them and all that, those soft negotiation skills.
Right, right. Let me ask you this, just on a note, what's a good what's a good formula for leadership for you? What is leadership to you? What's your understanding of leadership? What gets your crew under you, your team moving that works for you?
I think it's such an interesting question, and it's one that I think has evolved for me over the years. I'll
Mm-hmm.
say going to Harvard Business School helped shape that view in the sense that for me, leadership doesn't really exist in the absence of having a purpose and having a vision. So if you don't have a purpose, right, you're just kind of a rudderless ship that's just out here doing stuff to do it. And you can be a very good manager because you're just trying to solve for certain deliverables. It doesn't make you a great leader. So first and foremost, you have to have a purpose that's driving you, and you have to have a vision that is actually the tangible manifestation of that purpose. Once you get there, you can actually start figuring out, how do I lead? And so the biggest learning I would take from, I think, working in the field and Harvard was that leadership is making people around you better,
That's
making
right.
them as good as they can be to help actualize some shared goal. It's very commonly kind of presented as you sitting in front of a group of people, pointing, directing, telling them, and getting the satisfaction of having people follow orders. That's not leadership, right?
Mm-hmm.
If the goal, for instance, is for us to expand access to capital so that people can build wealth and buy real estate,
Right.
well, how do we take talented people to work around us? How do we, engage with talented clients? And how do we work together towards optimizing our skill set to getting there? And being able to orchestrate that kind of like a conductor
That's
is
right.
where the leadership comes in. And so it's a very active process, and it's a very iterative process as you observe who you're dealing with and you're figuring out, hey, okay, we're going to have to make adjustments. You don't know how many
That's
times
right. That's
when
right.
we sit and work with a client, we realize as we work at them where their strengths lie. And that's how we're so effective at positioning them and convincing a lender, for instance, why they should want to fund that project. And so that's where I see leadership really kind of coming into play. How can you make those around you better?
This episode is brought to you by Nicholas Brown, REI.club. Hello and thanks for watching this brief video. My name is Nicholas Brown. I'm an author and a residential developer here in the Dallas-Fort Worth area, and we're on target this quarter of redeveloping 5 properties here in the Dallas-Fort Worth area. And our passive investors, they're just sitting back and relaxing it because they're enjoying receiving the double-digit returns, which is protected, secured, and insured. So if you're a passive investor, or if you have 401k or retirement income or decent credit scores in the 700 and above, then download our chart for more information at nicholasbrownrei.club/partner, and I'll send you our DFW double-digit returns case study chart. Once again, for more information, go to nicholasbrownrei.club/partner. Okay. Ladies and gentlemen, I'm going to get more detail. He's going to give you an example of a recent case study that he just closed on in time. So if you read that about to section, we're going to have proof, because I want you to talk about the deal that you're in a short amount of time, a few days, you're going to visit your client in Houston, correct?
Absolutely.
In time.
Absolutely.
So we're going to get deep into that also. Ladies and gentlemen, this is deep. I love these types of podcasts, these interviews, bro. I appreciate that. So, and you were deep on leadership. I could go another series on that also. So my next question too is, you said CRE. So your company, tell them about your company. Tell them about your company.
Sure. So Diversified Lending Solutions is a mortgage advisory firm, and we help arrange capital for real estate investors, specifically those that are looking to scale their operations, who are not yet at the place that you could say they're a household name. They're not yet institutional in the sense that they have relationships with lenders and investors that put them in that billion-dollar space, but they're looking to get there, and they're looking for support in figuring out how to finance their transactions to grow. Okay. So these are talented, highly capable operators. They know the business. They understand the business, but they're still in the first, second, third inning of their company's career, and they're looking to help someone help grow them through the next several iterations.
Okay, so that's the purpose of this episode, ladies and gentlemen, this series. What we want to focus on is Mr. Vernon strategize on this, let's just say this quarter, these next 60 to 90 days, where we want to focus on a niche type of education or webinars or series that Mr. Vernon, he's explaining what CRE is, but it's more broad, but we're going to be a little bit more niche. We want to focus on. So who is your ideal, what they call it? We're not going to say client? Customer. Yeah. Customer, or who's your ideal customer?
Our ideal client is, and you already alluded to a deal that I'm happy to kind of talk a little bit about. But our ideal client is an operator, and let's stick with multifamily for now.
Multifamily. So that's what we want to go to for this term, ladies and gentlemen. For these next 60 to 90 days, 120 days, that's what his company, and I'll be honored to do more series about this, where you're going to focus on that certain niche, not for buildings or commercial buildings. We're going to focus on this series. I want you to educate if you can, or we focus on that type, what you're looking for, what source, if you don't mind.
Sure, absolutely. So in this instance, you have a multifamily operator. They have, let's say, 100 units or so under management. They clearly understand the sector, but their goal is to be at 1,000, 2,000, 3,000 units under management over the next several years. They have a limited base of relationships with lenders. They're looking to deepen that base. They're looking to improve the quality of the loans that they get. Right? And they're looking to do it in a way that doesn't distract them from all of their other functions of actually operating a portfolio. So we come in and we would help them arrange the best possible loan they could to grow their portfolio and buy assets. And in cases where they have existing loans in place that could be more competitive, we help them refinance out of their current loans into better loans so that their portfolio can be more profitable for them.
Okay, and this is what I teach my investors for residential, which at that time you're my source, Vernon. You're gonna walk me through, but my point is, I need a team, an advisory team of my source who's experienced. So you would be my source, my experience, where I don't have to go to another lender. I can come to you because you deal with more. You're sort of like I don't, as we say, a residential mortgage broker. Are you similar to that, where you can deal with more than one source? Where I can just come to you. I don't have to go to bank A or bank C or whatever to try to get this 50 to 100 unit taken care of. I can come to you. You're my authority figure, right?
That's a great that's a great question, and the short answer is yes. Although we don't call ourselves brokers, no disrespect to brokers, but I'll tell you why.
Educate us. That's the purpose of this. We need educating on this. Okay.
So typically, a mortgage broker is someone who's going to essentially cross you with a lender, right? They're going to find a lender, they're going to take your deal, and they're going to put them together. And usually that is simply them going out to a lot of different lenders and just pumping those lenders with whatever information you gave them about your deal. And they're just going to try to place the two of them together. We would refer to ourselves as an advisor, because we're not simply taking your information and then blasting it out to 100 lenders and seeing what comes back.
Okay.
We're working with you to help position your project, the narrative around that project, to position your narrative as an operator in the most favorable light, figure out the most appropriate people to go out to, and then actively negotiate with those people in order to get you the best terms. And getting you the best terms is not necessarily just getting you the lowest interest rate and getting you the largest loan amount. It's working through all the nuance of the deal structure on so many different items that go into a loan that most brokers just never think about, not because they're bad, but because they know that most borrowers just care about their interest rate. And so we find in a lot of instances, borrowers end up signing up loans that were not in their best interest because the broker was simply just placing them to whoever could provide them with whatever they asked for. And when they ask for a low interest rate. So an advisor is someone who takes a step back. They understand what the client is really trying to accomplish in this deal thematically as they grow their company, and says, okay, we have to be thoughtful in how we present this and who we go out to and how we structure this deal so that you can build a company that's going to be lasting and be scalable and be sustainable, and so that you have full awareness into that process. And so does a mortgage advisor do a lot of the same activities as a broker? Yes, but I would say they do that plus a whole set of other ones. And so that's why we make that distinction.
Okay. Well said. Well explained. Well explained. That's what we need here. That's the purpose of this. So you're an advisor. That's the feel. Okay. So that breaks down the next question, where I definitely want to stress this. This is one of the main questions. Some questions that's asked is where most borrowers go wrong seeking debt funding. I kind of lead to what you said now. Yep. So where most borrowers go wrong when they're seeking debt funding? Where do they go wrong when they're getting out there? So don't go to a mortgage broker. But I'm thinking, this is a side note, this is deep. I got to ask this question because I'm new to the field, and you're going to be my eyes when I do come across these types of 50 to 100 units on there, and you got the GP, LP, and all that, whatever I need the loan on it, you're going to be my eyes on that. What is the correct? Like I said, you don't go to a mortgage. The title CREs. That's why I'm getting confused. That some people may be confused on it. You got people that deal with multifamilies. That's their niche. But yes. What you're telling me is that's not their only niche. They just have a title. They're not unique, or that's not their main source of expertise. Is you?
No. What I'm saying is a couple of things. One, multifamily is just a subset of commercial real estate. CRE is commercial real estate. Multifamily is a component of commercial real estate.
Right.
So if someone's a multifamily operator, they are by definition a commercial real estate operator.
Okay.
So that's just the distinction in terms of CRE versus multifamily. In terms of mortgage brokerage, I'm not saying that folks shouldn't use mortgage brokers. I'm saying that they should gauge their expectations as to what they'll get when they hire one.
What you explained prior. Okay.
You get an advisor if you hire a broker. Expecting you get a broker, you're going to get someone that's going to blast your deal out to a lot of people.
Right.
maybe
Okay.
save you some time, but they're not going to be someone who's actually going to actively help you get the most comprehensive terms by being proactive, right? And putting your deal in the best possible light and framing you in the right light and creating a nuanced enough story and going to the right lenders with that story that they're actually going to get you what you want, right? So it's very much like you saying at the end of the day, you get what you pay for, and you have to know what you're signing up for, right?
Right.
If you're the type of person who knows, for instance, and this is something that I think is an important point.
Okay.
So many of us, and I've fallen into this habit, right? When you're so close to your deals for such a long time, in many instances you don't realize um, how the market will receive those deals, right? You go out and find a deal and it's the best deal and you're going to make a lot of money. And then you go out to investors and you go out to lenders and you're expecting them to fall over themselves and love it too because you love it.
Mm-hmm.
And then guess what? You go out and you hire a broker or you do it yourself and you go out to 20 guys and 20 gals and you get no responses from 50% of them, right? You say, oh, that's odd. Why did half of them not respond? But the other 50%, maybe some of those respond. And so because one of those guys responds and maybe you ultimately close with that guy, you say, oh, the process wasn't great, but I got a loan, right? And what you completely lost in the sauce in that process was that you may have actually just walked away from the better loan. Those 50% that ghosted you and didn't respond to you may have not responded because you didn't position your deal the right way.
Okay.
And if you position your deal the right way, they may have responded. And not only may they have responded, they may have liked the deal. And you may have actually been able to convince them to give you better terms than the
Right.
terms you got with this other person.
Right.
But because you're looking in the rear view and saying, oh, well, I got a loan, then now the next deal, you do the same thing.
Right.
And you do
Right.
the same thing. And then you end up 3, 4, 5 years out and you got deals done. You feel great about it. But then when someone looks at the portfolio and says, okay, let me look at your loan terms, they say, geez, these loans don't, I mean, why did you accept this and why did you accept that? While you're in it, it's very hard to have any perspective, right? But once you step out of it, and that's part of what an advisor helps you do, you start to realize, okay, these are my options. There are options out there better than what I'm currently getting, but I need to be proactive and thoughtful in how I get there. How do I bridge the gap?
That's
And so
awesome.
that's what the advisor helps you do.
Okay, that's awesome. Make it structured. You think long term. You try to be hold someone's hands long term because, as we used to say in the car business, yeah, I got the deal, but if they drive next door and see what's on that deal, when they see how this deal was structured, they're gonna feel bad. I don't want to be that person. You know,
No,
you want to treat them
no.
right, give them a
We
fair
and we
deal,
only
and
want to
long
build
term. Long
long-term.
term, exactly. Be professional. So long term, that's the question. So that's what leads to your next question. I should ask is what lenders won't tell you, but will prevent you from getting a loan. What a lender won't tell you? Most lenders, not
Yeah.
yeah.
And so that's a very good question. And before I answer it directly, this is what I'd say.
I ain't gonna say most. I'm just saying some lenders. Some
Yeah,
lenders won't.
yeah,
I won't
I
say
understand. Lenders are humans too, right? And lenders at the end of the day want to establish clients. So nobody in their right mind, unless they're just that personality, is going to want to completely close the door to you and make you never want to deal with them again,
right.
right? So you bring them a deal, and they're more likely than not, if they don't want to do it, just not to respond. Hope you forgot about it and found it somewhere else,
Right.
or they'll give you some very generic answer as to why they didn't like it. That's not very helpful to you. It doesn't help inform how you should approach them differently the next time. But it's also a riskless statement because you didn't piss them off when you said that. And so you end up walking away, with very little impression of that lender, right? Which is what they
Mm,
want. They don't want to make you mad if they're not going to fund the loan.
right.
They're not going to say to you, listen, you invest in inner city markets that I don't feel comfortable in and
I
I
don't want
don't know anything about. I don't think you're qualified to actually complete this project, right? Based off of what I'm seeing. I don't see that you know how to effectively underwrite this asset class. Your cash flow projections are looking really off. You're asking me for something that doesn't make any sense, and that either means that you don't know what you're doing, or you're wasting my time. These are, and I can go on and on,
Right,
but
right.
these are the laundry list, and we can hit some of the big ones, but these are the laundry list of things that lenders are not telling you, and you're walking around thinking, oh, I got some great lender relationships, so I know somebody I can call for the next deal. And
Right.
meanwhile, that person has this whole list of things that they just remembered from their interaction with you that were not the most positive. So guess what? When you bring them a deal the next time, are they going to drop every other deal that they're looking at to go
Right.
prioritize your deal?
I don't think so.
Not going to happen.
This episode is brought to you by Nicholas Brown, REI.club.
Hello and thanks for watching this brief video. My name is Nicholas Brown. I'm an author and a residential developer here in the Dallas-Fort Worth area, and we're on target this quarter of redeveloping 5 properties here in the Dallas-Fort Worth area. And our passive investors, they're just sitting back and relaxing it because they're enjoying receiving the double-digit returns, which is protected, secured, and insured. So if you're a passive investor, or if you have 401k or retirement income or decent credit scores in the 700 and above,
then download our chart for more information at nicholasbrownrei.club/partner, and I'll send you our DFW double-digit returns case study chart. Once again, for more information, go to nicholasbrownrei.club/partner. But this is what I want to do, ladies and gentlemen. Make sure, I'm going to plug this. I'm stressing this. Make sure you guys download this if you're listening in. These are nuggets. That's why we're going to have to extend this to another series. Make sure if you watch this on YouTube, make sure you subscribe. That's where we'll have another episode or a series, or you'll get an alert if we have a live. That's education. He just taught us something, what to look for. But I'm going to cut this a little bit short, ladies and gentlemen, because I want him to explain, to give you an example, a testimony, or a case study of he's now in a few days, ladies and gentlemen, at this recording, he's going to fly to meet his client. Is it in Houston, Texas?
That's right.
Okay. Explain this. It took less time than normal for other deals to close compared to a regular, I'm going to do the pronunciation, CRE broker compared to an advisor. Is that correct? That's correct.
So it is correct. Well, I'll say a couple things.
Sure.
One, I appreciate you bringing up the deal because it's a phenomenal transaction. I think it should be hugely inspiring to your listeners.
Yes.
The short of the story is that we represent a really inspirational operator based out of Texas who had a portfolio of about 500 multifamily units, was looking to grow her business exponentially, found a 460 unit property in Houston, multifamily, needs some work, had some history as an asset, and her business plan was to step in and to take an asset that was needed some work and to turn it around and increase the cash flows on that property. And so we represented her in her effort to get a senior loan. This was a very large transaction. She was buying a $40 million property and needed to put in several millions of dollars to improve it. So we're not talking about a small transaction.
All right, ladies and gentlemen, if you're listening in to this, what I had to do at the time, I had to add video because we got cut off on Zoom. If you're listening in on a podcast, I'm editing this here. So we're going to continue, which what happened is Vernon's going to give us a case study, which he was deep into it, ladies and gentlemen. I mean, he was deep into it. I got it, but our audience didn't get it. If I didn't edit this, if you watch this on YouTube, you would see the pause button like that AT&T where it pauses. We don't want that. We don't want that. So we're going to update this. And he had this flow, but I want him to give a case study as before of what you were explaining, sir, about. Here's an example, which you had an operator, which in the next few days, you're going to Houston to meet up with your client. Can you explain that? What's the case study? What?
Absolutely. And this should be a really inspirational story to any
Yeah.
one of your viewers, because
Okay.
this, in my mind, is really the perfect example of what so many of us are aspiring to accomplish.
Okay.
Have a client, great operator of multifamily properties, probably 500 units under management before we took them on as a client, and very unapologetically have a goal of growing exponentially over the next several years.
Okay.
Found a large portfolio, 460 units in Houston, property that has suffered from some issues, but has a lot of potential for improvement, workforce housing. And she very ambitiously took it on as her goal to buy a 460 unit property and effectively double her assets under management with that purchase. So kudos for her for the ambition. And we love to work with folks like that have the drive. Kudos for her for also having the background to support the goal.
Does she have a
So
team? Does she have a team? Is GPLP, or she's total by herself? Or does she have a
she
team?
has a team. She has a
Okay.
team, and that's something we can definitely talk more to in another
Sure.
segment.
Sure.
Building the right team around you,
Right.
but regardless of the resources that she had, it was still a massive undertaking to take down what was a $40 million property
Wow.
that's going to require several millions of dollars to improve and to fix and to bring it to its true potential. And so being in a position where she could say, listen, I know I'm going to have to go out and I'm going to have to get this loan, and I need to work with a partner that's going to help me get the best loan, help convince lenders that I'm the right operator for this project, and get me the terms. Not just get me a loan, because frankly she's very experienced, but get me the right loan.
Right.
Get me a loan that's the right mix of affordability, i.e. the interest rate, the right leverage, i.e. the loan amount, the structure that allows me to execute my business plan, whether that be an extension options for the loan, or how cash is distributed, or what component of the loan will come in the form of future funding for renovations. A whole laundry list of aspects to that deal that need to be negotiated very thoughtfully to help accommodate her business plan for that asset. And we're very proud to say that we worked and very, very much did treat her and view her as a partner in being able to fully understand her project, be able to communicate that project and her effectively to an operator who says not just maybe I'll lend on it, but I'm going to hit you in the head with terms you're not going to love, or you're going to have to convince me if I want to do it, and
Right.
it's going to be at terms that you don't love. All that noise, or that I'm just not even going to respond because I don't do these types of deals.
As you were saying earlier.
Like that, like we were talking about earlier, taking it away from that to, wow, this
It's
is a
attractive.
dynamic company that we should want to hitch ourselves onto right now, because she's going to be taking over Texas, and this is the loan for us to be able to partner with her. That was our goal. And then throughout that process, to use that energy to get her the terms that she deserved for that deal. And that's what we did. And we closed on that deal. And she's very happy about that. Now she has 500, but 1,000 units under management.
Congratulations. Wow.
And that's just going to keep on growing. So we'll be in Houston next week with her at the asset. And we just view that as such a tremendously inspiring story, not because just that she was a small operator that's growing very quickly, but she also happened to be a woman. She also happened to be an African-American woman.
Wow.
And when you think of the historic significance of that.
Right.
I challenge you to find, 5 women in this country that have 1,000 units under management in operation. And so being a part of that is something we feel hugely validated by and hugely inspired by. And we want more folks like that to help build the next army of folks like her.
Wow. Congratulations. I'm excited about that. You just painted the picture also. It's not that many women out there of color that's doing what she's doing. I love to have her on, ladies and gentlemen. a teaser as a guest on there. We're gonna have 3 or 4. I want to meet your partner, also your business partner, Eric, in time. We want to meet him if we can, if you allow, in time for another episode on there. But I love to get on there. So how long did that take before we go? Was it normal
Sure,
time, or she had everything
sure,
squared away in order? They're like, hey, we can work this deal here. Did it hit your
sure.
table, or you already had a relationship with her prior?
Sure. So, and this is going back to what we were talking about before, again, between the distinction between a broker and an advisor.
Right.
We knew there was a very, very hard and fast fuse on this deal. The seller needed to sell, and there was a hard closing timing that was pretty aggressive. And we knew that we had to get people comfortable with this asset, and then on top of that, get them comfortable with closing relatively quickly. Typically, on a deal of this
Mm.
size, you should expect a 60-day type closing period.
Okay.
And typically on a deal this size, you would expect a marketing period of at least 2 weeks, but maybe a month leading up to a lender committing to fund the deal.
Sure.
So we were in a position where if you take that all the way out, you could find yourself with a 90-day type process from beginning to end, and we simply didn't have that. So part of our adding value in this case was how can we condense that? How can we get as smart on this asset as quickly as possible, condense the timeline so we can get a lender or multiple lenders, which we did, got multiple lenders to
Sure.
want to do the deal in the matter of a few weeks. And then from that point, make a decision fairly quickly, and then worked around a 45 versus 60-day closing time.
Wow.
So when it all came down to it, a deal that we needed to close, in early December or mid-December, closed well inside of that. I think when we went into the deal, no one thought, given the timing, that
Wow.
that was going to happen, and that she would walk away very happy with the loan she got in that time frame. We managed to check both boxes, and
Wow.
and we made it happen. And so that was us, that was her, that was the lender, and that again is when you work with the right advisor who
Right.
knows the lender to work with and can be selective in choosing, then you're taking all of these variables and putting them into consideration when you're deciding who to get in bed with for the loan.
Wow. Well, congratulations on that, man. I know that's exciting, man. I could just,
Thank
I wish I could have been there to
you.
watch. I can see your excitement, man, just putting it together. Here's a side note. What do you like, the beginning or the after effect of helping someone? What do you like in it's everything is about sales and marketing, but what do you like about your business, man? The
So what I
beginning or the
love,
after?
I think I view myself as being a pretty academic person. I like to solve problems. The
Okay.
fun part of this for me, and I think my partner would say the same, was taking on the challenge of, if you just look at this as a little maze and figuring out how to navigate the maze to get to the other side as quickly as possible. In involving all the little questions and scenarios that you need to think through to get everyone on the same page. That's really what's fun. And I think a lot of people in real estate share that when it comes to
Yeah.
putting it all together. And then take into effect, it's not just you and your client, it's you, your client, the lender, it's the legal counsel on both
Right.
sides, it's the title company, it's the environmental, the engineer, the
Mm.
appraiser. You're having to navigate all these people who have their own interests in the situation to get to someplace on the other side. So bringing it all the way back to the beginning of your show on leadership, that's when leadership comes in. How can
Right.
we take the best of all these people, because they're all good at some part of the process,
Wow.
but they all
Wow.
have shortcomings that can slow it down. How
Right.
do we accentuate their strengths, and how do we mute the weaknesses, or help improve the weaknesses, so we can all
Man.
get this deal closed?
That's deep, Doug. That's deep. You deep, Doug. So this is what I want to ask too, and then we're about to close. The next one is perspective. What is your perspective on next year? What's about to happen? What's your perspective? What do you feel about your field of business? What's about to happen, man?
So a lot of things are happening next year. We're in a huge inflationary environment that scares a
Right?
lot of people. Prices are up. Investors have to be very cautious in what they buy. I think investors have to be thoughtful on their hold periods on their deals, that in order to realize the returns they're looking for. So I think people will be cautious in terms of buying.
Hmm.
I also think, though, that this is a period where, for underrepresented groups, whether that be women, minorities, and otherwise, there are various large institutions, private equity companies that are trying to find strategies, partially because they see they're missing that opportunity, partially from pressure, but for various reasons on why they should be investing in operators like the one I just mentioned. And so we're excited about bridging the gap and helping operators that find themselves in a position where they could use equity capital to grow their businesses, not just debt, being in a position to help facilitate introductions with those type of investors in order for them to grow their businesses. So
what is equity capital? On the side note, what is equity capital? Man, I know we've pushed for time, but what is equity capital? Short version, man.
So think about it in the residential world as just the down payment to buy your property. In this case,
okay.
A $40 million property and you need $8 million. There are not many, I'm not going to say there are none, but there are not many folks that can just snap their finger and come up with $8 million. And so that means you have to raise it, and you're either raising it between friends and family, which means you have a very, very high net worth base of personal relationships, or you're going out to family offices and private equity funds. And that process, frankly, is not one where most small business owners excel. And so, and especially operators from underrepresented groups. So when you think of that, you think about the opportunity to put a battery or a turbocharge in some really talented operators back by providing some portion of that 8 million, a meaningful amount, so that they can go out and actually buy a property and get a loan on that property. And that to me is hugely transformative. And that's where economic development really starts to have a really deep impact.
Man, we got a whole other series to go. I love these types of, you deep, bro.
I could keep going for a long time.
That's what I'm saying, ladies and gentlemen. You got a treat here. You got a treat here, ladies and gentlemen. I promise you got a treat. So make sure you guys subscribe. Make sure you download this if you're watching the podcast. It's going to be, stay tuned for this year, these next quarter coming. I want to get this, man. This is exciting, man.
I'm glad you're excited as I am.
Excited, man. I love these things. You've been in the trenches. You know it. I always have a saying, ladies and gentlemen, one eye is king to the blind. He's going to lead you there, man. Just step, make that step. Hold his hand. He's going to lead you there. He's not going to lead you wrong. If he leads you right, he's considered a king. That's why I say one eye is king to the blind, man. We're blind. I'm blind, brother. I'm listening. I'm going to hold your hand. Got me there. Got me there, now. I got other people around me. I got listeners here, and you got here people watching, man. Let's do this, bro.
And that's why 2022 can be a really exciting year. There's a lot of talent, there's a lot of expertise, there's a lot of intelligence, and there's a lot of will right now to help folks really elevate their operations. And so I want to be part of that, and I want to help folks elevate. And we have the resources to do it. So
the sources, I appreciate that. So here's the last word. How can they get in contact with you? Is it, you got anything, last words, any way they can reach out to you, or any specials you give them?
Sure. The easiest way to reach me is LinkedIn. Just DM me, Vernon Beckford, Beckford. And if you DM me CRE template.
Okay.
And I'll blast out some of the three, as you mentioned before, the three
states that deny. Okay. That deny their loan. Because you just explained some of them right then and there, but you're going to give like a basic template that they can follow.
Exactly.
Okay. That way, ladies and gentlemen, if you reach back out to Mr. Vernon and his team, everything is a little bit more smoother and he understands it. So he's going to give you a basic template, am I correct? For free at this time. Make sure, because it's limited. His time is valuable. I promise you, ladies and gentlemen. Yeah.
So that's the best way to reach me.
Okay. Well, hey, I definitely appreciate your time. Can we ever have you on in the near future for another series, if possible?
Please, I would love to speak to your viewers, and I hope they find this helpful.
Okay, thanks, man. Well, that's it, ladies and gentlemen. You had a treat. I hope you enjoyed. Make sure I want to get you guys review. Let me know what you think. And in the top review, I'm gonna give you a special. I got a special course for you. It's worth at least $2,500. I'm gonna give you that. and we'll go from there. But as I say, as I in my videos and these podcasts, don't condemn, don't complain, because you have a choice to make a change. Have a great day.
Thanks for joining us on the Nicholas Brown Podcast. Make sure to visit our website, www.nickbrowninc.com, where you can subscribe to the show in iTunes, Stitcher, or via RSS, so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. If you like this show and you are a new real estate investor, then check out one of Nicholas's free reports called the Wholesale Dominator Report, also located on our website, www.nickbrowninc.com/free reports. Be sure to tune in for our next episode. And remember, don't condemn, don't complain, because you have a choice to make a change. Have a great day.